Remember the euphoria? The incredible growth stories of the pandemic era? Companies like Zoom, Peloton, and Beyond Meat became household names, their stock prices skyrocketing, promising a new future. But what goes up must often come down, and sometimes it comes down with a breathtaking speed. Zoom, ZM. IPO stock price was $36. Stock price went up to $568 level. Now its recent price is around $81. Up plus 478% from IPO price to peak, now almost 86% down from peak. Peloton, PTON, IPO stock price was $29. Stock price went up to $171 level. Now its recent price is around $7.60, up plus 490% from IPO price to peak, now down 96% from peak. Beyond Meat, BYND, IPO stock price was $25. Stock price went up to $72 level. Now its recent price is around $2.50, up plus 188% from its IPO price to peak, now down 97% from peak. Today, we're dissecting the rise and spectacular fall of these market darlings, uncovering the intricate details of their unsustainable success, and extracting crucial lessons for every investor. To understand their fall, we must first understand their ascent. Each of these companies tapped into unique shifts amplified by the pandemic, creating an almost perfect storm for explosive growth. A critical part of their narrative was the stream of innovative features they were building, which seemed to cement their place at the top. 1. Zoom Video Communications, ZM. The virtual lifeline past success details. Before pandemic, already a strong, reliable video conferencing tool, known for ease of use and stability, especially in enterprise. During pandemic, became the essential communication tool for remote work, education, and social connection. Unprecedented demand. Free tier attracted millions, converting many to paid. High user engagement, low friction adoption, symbol of resilience during lockdowns. Top 5 key reasons for success. Product market fit, perfect solution for a sudden global need. Ease of use, intuitive interface for all ages and tech levels. Scalability, infrastructure handled massive surge in users. Network effect, more users meant more value for everyone. First mover advantage in mass adoption, became synonymous with video calls. Key features that built the hype, Zoom rooms and hardware, integrated physical conference room setups, suggesting a permanent shift to video-first workspaces. This expanded their market beyond just personal devices. Zoom Phone, the launch and aggressive marketing of a cloud-based phone system, aiming to replace traditional office phone lines. This was touted as a major diversification from just video. End-to-end encryption, a key feature promoted to address rising security and Zoom bombing concerns, reassuring enterprise and government clients. The app marketplace, the creation of an ecosystem for third-party developers, promising to turn Zoom into a comprehensive collaboration platform, and not just a single-purpose tool. Work from anywhere. Tools, introduction of features like virtual backgrounds, enhanced screen sharing, and advanced polling, which made the platform more engaging and seemed to prove its long-term viability as a productivity hub. 2. Peloton Interactive PTON, the home fitness revolution past success. Details before pandemic, niche luxury product, loyal community, high-quality hardware plus subscription model, strong brand appeal among affluent users. During pandemic, gyms closed, demand for home fitness exploded. Peloton became the premium at-home solution. Unprecedented sales of bikes, treads, massive growth in subscription base, seen as a status symbol and health necessity. Key reasons for success, captive audience, gym closures forced people home, integrated ecosystem, hardware plus software plus community, subscription model, recurring revenue, high customer lifetime value, brand strength and marketing, aspirational exclusive feel, fad to lifestyle, tapped into broader wellness trend. Key features that built the hype, gamification and social features. The live leaderboards, high fives, and performance metrics created a competitive, addictive environment that kept users engaged and reduced churn. This was a massive selling point. Expansion to other workouts. The company wasn't just about biking and running. They expanded their digital content to include yoga, strength training, meditation, and walking. This was seen as a way to capture a much larger market and solidify their role as a comprehensive fitness app. New product launches. The introduction of the higher-end Bike Plus with auto resistance and the Peloton Tread, as well as the lower-priced bike, showed investors a clear product roadmap for expansion and market segmentation. Celebrity instructors. The star power of its instructors, for example, Cody Rigsby, Alex Toussaint, built a cult-like following that was seen as a major defensible competitive moat. App-only memberships, the push to offer digital-only subscriptions to non-hardware owners, was presented as a way to grow the user base exponentially and create a massive funnel for future hardware sales. 3. Beyond Meat, BYND, the plant-based future past success details, first mover advantage. Positioned itself early as a leader in plant-based meat alternatives, gaining consumer mindshare before mainstream competitors entered. Compelling mission, built its brand around sustainability, health and animal welfare, resonating with environmentally and ethically conscious consumers. Strategic partnerships, collaborated with major food chains, for example Dunkin', KFC, McDonald's, Carl's Jr., to reach mass market audiences. Retail penetration expanded rapidly into grocery stores nationwide, securing shelf space next to traditional meat, making it accessible to everyday shoppers. High-quality product innovation. Develop products that closely mimic the taste, texture, and cooking experience of meat, winning over flexitarians, not just vegans, vegetarians. Celebrity and investor backing. Attracted high-profile investors and endorsements, for example Bill Gates, Leonardo DiCaprio, boosting credibility and media attention. IPO momentum. Its highly successful IPO in 2019 fueled brand visibility, investor confidence, and consumer curiosity. Health-conscious positioning. Marketed its products as healthier alternatives to red meat, tapping into rising wellness trends. But the world didn't stay locked down forever. As life normalized, the very conditions that propelled these companies to stratospheric heights began to unravel. The industries they dominated underwent rapid, fundamental changes, and crucial opportunities to adapt were tragically missed. Zoom, the return to reality industry change. Hybrid work emerged, in-person meetings resumed, competitors, Microsoft Teams, Google Meet, WebEx caught up, offering integrated solutions. Zoom fatigue became real. Missed adaptation, over-reliance on new normal. Assumed pandemic-level usage was sticky. Innovation lag. Didn't diversify fast enough beyond core video conferencing into more integrated hybrid work solutions or complementary services, for example, advanced collaboration tools, AI integration. Security concerns. Initial security issues eroded some trust, though largely addressed. Peloton, the post-pandemic pushback industry. Change. Gyms reopened, outdoor activities resumed, supply chain issues eased, leading to overproduction. Competitors, cheaper smart bikes, other fitness apps flooded the market. Consumer spending shifted from home goods to experiences. Missed adaptation, poor inventory management, built too many units assuming continued pandemic demand leading to massive write-downs. Beyond Meat, the crowded plate industry change. Explosive growth in plant-based alternatives from established food giants, Nestlé, Tyson, and numerous startups. Novelty factor diminished. Inflationary pressures on consumers, supply chain issues affected costs. Missed adaptation, loss of first mover advantage, failed to innovate quickly enough to stay ahead of competition. Taste and texture advantage eroded. Pricing remained premium as competitors offered cheaper alternatives. Demand overestimation, overexpanded production, leading to inventory issues as growth slowed. Operational inefficiencies, struggles with manufacturing costs and supply chain management. Loss of cool factor became just another option in a crowded market. With hindsight, the signals seem obvious, but at the time, a potent mix of euphoria, narrative bias, and a lack of critical long-term thinking blinded many, from individual investors to seasoned financial analysts. The crash of these high flyers wasn't just a blow to their individual shareholders, it sent ripples through the broader financial markets, impacting institutional investors, banks, and even signaling a shift in the economic landscape. The saga of Zoom, Peloton, and Beyond Meat serves as a powerful reminder. The stock market is a forward-looking mechanism, constantly trying to price in the future. While innovation and disruption are celebrated, they must eventually be backed by sound fundamentals and adaptability. For investors, the greatest defense against future bubbles is knowledge, skepticism, and a steadfast commitment to disciplined analysis. Learn from these stories and invest wisely. Call to action. If you found this analysis helpful, please like, share, and subscribe for more insights into the world of finance.